Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, October 15, 2025, and here is everything you need to know as the markets close for today. Indian markets staged a strong comeback today, snapping a two-day losing streak with broad-based gains across the board. The Nifty 50 closed at 25,323, up 178 points or 0.71%, while the Sensex surged 575 points to settle at 82,605, marking a 0.7% gain. Bank Nifty also joined the rally, climbing 300 points to close at 56,799, representing a healthy 0.54% increase. The broader market participation was encouraging, with the Nifty Midcap 100 and Smallcap 100 indices outperforming the benchmark, rising 1.11% and 0.82% respectively. Market sentiment received a major boost from multiple factors, including falling crude oil prices, dovish commentary from the U.S. Federal Reserve signaling potential rate cuts, declining U.S. 10-year bond yields, and optimism around potential foreign institutional investor flows shifting towards emerging markets like India. On the currency front, the Indian rupee strengthened significantly today, closing at 88.06 against the US dollar, down 0.81% from the previous session's 88.79. This marks a notable appreciation for the rupee, providing relief from recent weakness and helping to ease import costs for the economy. Leading the charge today were stocks from the financial and realty sectors. Bajaj Finance and Bajaj Finance emerged as top performers on the Nifty, capitalizing on the optimistic lending environment. Trent continued its stellar run, while Asian Paints and Trent, which operates Zomato, also posted strong gains following robust quarterly results. On the flip side, IT majors faced selling pressure, with Infosys leading the laggards alongside Tata Motors, Tech Mahindra, and Maruti. Banking names including Axis Bank and Kotak Mahindra Bank also ended in the red despite the broader market rally. From a technical perspective, Nifty successfully defended the crucial 25,000 to 25,050 support zone during the session and formed a bullish candle on the daily chart. The index now faces immediate resistance at the 25,350 to 25,400 zone, which represents a confluence of the downward sloping trendline and previous swing highs. A decisive breakout above this level could trigger a move towards 25,500 to 25,600. Bank Nifty held its support around 56,000 during intraday weakness and bounced back strongly. The immediate resistance for Bank Nifty is placed at 56,900 to 57,000, while support remains firm at 56,000. Sectorally, it was a green sweep, with all indices closing higher except Nifty Media. Nifty Realty stole the show, surging an impressive 3.04%, driven by robust September housing data, easing interest rate expectations, and attractive valuations. PSU bank stocks rallied 1.67%, benefiting from the positive sentiment around potential rate cuts. The metal index gained around 1%, supported by stronger global cues and a weaker dollar. Financial services and FMCG sectors also posted gains of approximately 1% each. Commodity markets witnessed mixed movements today. Crude oil prices remained subdued, with WTI trading around $59 per barrel, down nearly 0.4% from recent highs. The continued weakness in crude provided significant relief to India as a major oil importer and helped boost market sentiment. Precious metals, however, continued their record-breaking rally. MCX gold futures touched a fresh all-time high of 1,27,500 rupees per 10 grams during the session, before settling around 1,26,700, up nearly 0.37%. The December gold contract opened at 1,26,915. Silver prices also surged dramatically, with MCX silver futures crossing 1,61,000 rupees per kilogram intraday, eventually closing near 1,60,000, marking a gain of approximately 0.39%. The silver rally continues unabated despite the recent liquidity ease in London markets, driven by safe haven demand and tight supply conditions. Renewed US-China trade tensions continue to simmer in the background, with President Trump threatening additional tariffs on Chinese imports related to rare earth metal export controls. In the Middle East, fragile de-escalation continues, with the Rafah crossing remaining closed for logistical reasons, though markets are viewing developments as signs of sustained, albeit tentative, peace efforts. Political stability in France after Prime Minister Le Cornu's reappointment also contributed to positive global sentiment. Looking ahead to tomorrow's session, the technical setup remains constructive for both Nifty and Bank Nifty. For Nifty, the key level to watch is 25,350 to 25,400. A sustained breakout above this cluster resistance could open doors for a rally towards 25,500 and potentially 25,600 to 25,800 in the near term. On the downside, immediate support is placed at 25,275, followed by the crucial zone of 25,050 to 25,000. For Bank Nifty, maintaining levels above 56,000 is crucial to keeping the positive sentiment intact. A move above 56,700 to 56,900 could trigger short covering towards 57,300. However, a break below 56,000 may drag the index down to 55,500. The market's ability to sustain above short-term moving averages and the golden retracement level is encouraging from a technical standpoint. With the India VIX falling over 5% to 10.53, volatility has eased considerably, which typically favors bulls. Given today's strong rebound and the technical breakout setup, traders should watch for a decisive move above Nifty's 25,400 resistance tomorrow. A breakout could present momentum buying opportunities in realty, PSU banks, and metal stocks which are showing relative strength. However, keep stop losses tight below 25,200, given the clustered festive season ahead and potential consolidation. For those holding positions, protecting profits at current levels makes sense given we're approaching Diwali. That's all for today's market wrap. Stay tuned for tomorrow morning's update and send in your questions. Until then, trade smart and stay informed. This is Prem signing off.